It's Wednesday, September 20th, 2023. I'm going to start out today by saying this. Things are very, very confusing. And as we watch this economy being run right off a cliff, it is getting more confusing. If anybody watched Jerome Powell today and the Fed meeting, it was very, very confusing. And we'll get into that a little bit more in this video, but a few other things that really seem confusing, and maybe some of you are a little bit confused by what's happening too, is, we're looking at auto strikes, layoffs, inflation, the housing collapse, the commercial real estate collapse, national debt now over $33 trillion. The consumer is no doubt struggling. Real wages are down. College tuition repayment begins very soon. And yet the markets seem to ignore all of this. Markets down across the board today, all in the red, but it's shocking that we didn't see the Dow Jones literally down 1,000 points today on everything that is happening. These markets should be crashing. They're not, because they're highly, highly manipulated, and they're going to continue to manipulate these markets for as long as they can until they no longer can manipulate these markets. But, I think that it is quite possible that we're going to see a time as we get deeper into this recession slash depression. There's no doubt we're in a massive recession right now. I will say this again. I think we are in the beginning stages of a very, very serious depression. And I guess as long as the television and the markets tell you everything is okay, even though you're living in a recession or a depression, many people will believe it. Even though they're broke, they have no opportunity, they have no net worth, they have more money going out than coming in, they'll still believe everything is okay because the television tells them so. We could quite possibly go into a serious depression, and yet the Dow Jones will keep going up. The markets will continue to go up during a depression. That's just how out of whack things are. This is how confusing things are. You know that things are bad, ladies and gentlemen. You cannot save money. You have a savings rate of 3.5%, national debt over $33 trillion, unfunded liabilities over $190 trillion. We're now looking at just servicing the debt at $1 trillion a month. And it's going to double that in a matter of a few years. It's going to be $2 trillion a month just to service the debt. And we're going to continue to print into infinity, and we're going to cause the demise of this country and of the U.S. economy, because we are going to absolutely collapse the U.S. dollar. And you can see where all this is going with these BRICS countries, the BRICS 11, which will be the BRICS 20, the BRICS 30, the BRICS 50, the BRICS 70. You know where it's all going. Doesn't mean it's going to happen next week or next month or next year, but at some point you can see where it is all going. Wall Street reacts to the Fed's confused 2024 hawkish shock. Expect this, and I'll just kind of go through just some of the notes from today's meeting. I watched most of it. I was just thoroughly confused pretty much through most of it, but expect higher for longer. This seems to be the narrative now from the Fed, and the market better accept this. The market continues to deny that rates are going to go up. They're going to stay up for longer. They're going higher for longer, but the markets are hoping for rate cuts. Now, the Fed says instead of 4 rate cuts next year, we're going to see 2 rate cuts next year. So the markets did not like that. But my question is, how can you even have 2 rate cuts next year when your goal is 2% inflation? We're at 3.7 right now. And I don't know about you, but I think inflation is going to continue to go up, and oil prices are going to make sure that that happens. So I think that this month, the month of September, I think inflation is going up. And how in the world can the Fed cut rates in 2024 and not have inflation down to 2%? So if we're at 3.2%, they're going to start cutting rates. It seems to me it would just defeat the purpose. I don't think, and I could be wrong here, but I don't think the Fed is going to be able to cut rates next year like they're saying. And I think that they're just feeding the markets that just so these markets don't crash. They're feeding this hope that, hey, maybe it won't be 4 cuts, but we'll cut twice. I don't know how you do that when you still have out of control inflation. And we all know that real inflation is not 3.7%. It's probably closer to around 10%. Many would argue it's much higher than that. And in certain areas of this economy, it is much higher than 8 or 10%. Powell believes that I couldn't believe when he said this today, that the average household is in good financial shape. How disconnected can Jerome Powell be? Or is he just flat out lying? I mean, this man is not dumb. He has to understand what is going on here. But how in the world can he say with a straight face that the average U.S. household is in good shape? The average U.S. household is in probably the worst shape of its life. You'd probably have to compare it back to something during the Great Depression. People are broke. They're in big trouble. If people didn't have credit cards right now, I want you to imagine how big the food lines would be in America. You know, if people didn't get a little plastic card for SNAP and all these other food benefits, how long would the food lines be? We have 43 million people on food stamps in this country. They get a little card, they go to the grocery store, and you would never even recognize these people because you just think they're using a debit card or a credit card. 43 million people on food stamps. Millions upon millions of people now are completely reliant on the use of credit cards to pay for essentials. If people didn't have the snaps, they didn't have the credit cards, imagine how many people would be in big, big trouble in this country. And how long can this country continue to subsidize all of this? And what kind of hit will the banks take when people begin to really default on their auto debt and on their credit card debt, on their mortgage payments, on the commercial loans? When all of this begins to default, how long and how many banks are going to be able to survive this? The hedge today, Peter Schiff, the inflation war is over, inflation won. If you get a chance, check this article out. I'm going to go over this article. I think it's really important to read this to you and get an understanding of what's going on here. And I think Peter Schiff is one of the brightest minds regarding the economy. He says most of the talking heads on financial media are saying that everything is great. Not okay, they're saying it's great. The inflation threat is pretty much behind us. There are a few more bumps in the road, but we're on the road to 2%, no problem, we'll be there. The Fed will be cutting interest rates by next year, so these high rates aren't a problem. It's just a temporary nuisance until we get to low rates. He goes on to say, it's obvious to anybody who opens their eyes that inflation is not topped out and coming down. It's bottomed out and going up, and people who are blind to this, who are asleep, they are in for a rude awakening, Peter Schiff says. And he says that's a lot of investors. Oil prices are up 8% in September. Monthly interest rates continue to climb. Americans have a lot of debt, and they use a lot of energy, he says. It will continue to get more expensive, ladies and gentlemen, to service debt and drive your car or heat or cool your house. All these Goldilocks scenarios out there, they're all going to fall apart in 2024, Mr. Peter Schiff says. I agree 110%. You better be careful, ladies and gentlemen. I hope that you're making the necessary preparations for what is coming. I think 2024 is going to be a historic year, a monumental year. I think we're going to see things happening here socially and economically that we never thought possible. And the people out there that want to laugh this off, go right ahead, laugh it off. We know you're scared. We know you're unprepared, and that's why you have to laugh and deny the truth. You have to deny reality because you're not ready for it. You're scared. And instead of being scared and laughing and being in denial and ignoring the danger, I really hope and pray that you take action. I hope you get off the couch and take action. GM and Stellantis just laid off more than 2,000 additional workers because of the union strike. GM laid off 2,000. Stellantis laid off about, I think, 370, 380 workers. They closed another plant in Kansas because of this strike. Another article here, we're in the abyss, how the union strike could hit the economy. The first impact of the strike, it says, will be felt in auto workers' homes and communities. People who are striking, the strikers, they're going to go out and spend less money, right? Because the ones that just got laid off here at GM and Stellantis, they're not even eligible for unemployment. Now, the people who are eligible, they're getting $500 a week, but you got car payments, you got house payments, you got kids, you got all these living expenses. So they're going to be spending less money. Depending on how long the strike goes, parts suppliers will see a decline in orders, which will also affect worker compensation and their communities. Car prices could go back up. We're finally seeing car prices coming down, especially in the used market, but now they could go up. And think about what this is going to do to the auto market. You have new car prices going up, interest rates going up, and inflation going up, all this happening at the same time. So who's going to buy these cars that are sitting on the lots? Who can afford one of these cars? Who can get approved for financing on one of these cars? It's going to be very, very difficult, and this could have a major, major impact in the auto sector, without a doubt. Earlier today, I was watching CNBC. No, excuse me. It was Fox Business, and they rolled out Brian Chesky, CEO and part owner of Airbnb. I thought this was very interesting. Again, this was on Fox Business. And they roll Brian Chesky out, and he's telling you how great everything is, and how good Airbnb is going to do, and how it's going to have a blockbuster year next year. And the interesting thing they didn't talk about is him selling 150,000 Airbnb shares on September 12th, or the 270,000 shares he has sold over the last couple years. So why is Brian Chesky, part owner of Airbnb, CEO of Airbnb, why did he not elaborate on that today? Why was he pumping up Airbnb today, but not telling you he's selling and getting out? What does he know that most people who are invested in Airbnb don't know? And what about this article from Fortune.com? Joe Gebbia, the 41-year-old co-founder of Airbnb, has gotten nearly $3 billion richer this year and sold over $1 billion of stock on the back of the roaring bull market. So he sold off all this Airbnb stock. What does he know? What does Brian Chesky know? What do these guys know? Why are they selling yet telling you should be buying Airbnb stock? Interesting, isn't it? And I think that this is going to be a real detriment to the housing market, is when the Airbnb market really collapses. And I believe truly it is going to collapse. I believe it's beginning to right now. You're seeing more restrictions across the country on Airbnbs, but the biggest restriction on Airbnb is going to be people's wallets, people's savings accounts, people's wages, people's jobs. When people don't have the discretionary spending ability, when they don't have jobs, when they don't have real wages going up, when they have no money saved up, they're probably not going to be doing short-term rentals. And we have so many millions of properties, so many people wanted to become real estate moguls. And they got into this business, and they're leveraging one property for another. And there's people that I know that have maybe 2 Airbnbs, 1, 5, 10. They're highly leveraged. And they never ever thought ahead that what if the economy slows down? What happens when the government stops pumping money artificially into the economy like they just did with the $7 trillion? Of course, everybody was making money. People were making money in cryptos, NFTs, meme stocks, Airbnbs, flipping Rolex watches. Everybody was making money. It was easy. Now it ain't going to be so easy, and now people are holding massive amounts of debt. They're highly leveraged, and this is going to be a big, big problem. And just shifting into this next article from CNBC, weekly mortgage demand increases driven by a strange surge in refinancing. And this kind of goes with the last article. Now, demand in mortgage applications, big deal. It was up like 2% week over week, but it's down 26% from a year ago. Anybody can apply for a mortgage. Who cares about the demand? How many people who are actually applying for a mortgage can actually get one? Many people do not qualify now. Many people are being turned down. Many people who are in escrow right now are getting out of the escrow, and these escrows are falling apart. They're falling through. But the interesting thing in this article is the surge in refinancing. And I could be totally wrong here. Comment down below. Let me know your thoughts. But this is the concern that I see here in this 13% uptick in applications for refis last week compared to the previous week. People now, I believe, are tapping their home equity because they've got to raise funds to deal with a financial emergency. Now, I don't know offhand what the refi rates are. I would say, on average, probably around 9%, maybe 10%, somewhere between 9 and 10%. But are people tapping into home equity to pay down their massive credit card debt that they're getting charged 22% on? Maybe they've got, large car loans that they're financing for 6-7 years, and maybe they're pulling money out of the house at 9% to pay off the cars, pay off the credit cards. Scary thing is, though, you're putting your house in jeopardy, and you're using your home as an ATM. And that is very, very dangerous in my opinion. But I think what we're seeing here now is people tapping into their equity to raise funds, to raise capital for these financial emergencies that they're in right now. I'd love to know your thoughts on that. Comment down below. But I think that a lot of this, people are desperate, they're broke, and they're going to the last place they can get money, and that's their homes. I saw a lot of people do this back in 2007, and by 2008, when home prices were collapsing, people were running to the exits. They couldn't get out because they owed too much money on their home. Prices went down, and on top of that, they borrowed all this money out of the homes, and they were in big trouble. And so most of those people had to do a short sale, or they just defaulted on the property altogether. But I think that this is a very concerning indication right here that people are so broke that when you're borrowing money out of your house at 9%, the only reason you would borrow money out of your house at 9% is because you're broke, you have a financial emergency taking place, you're trying to consolidate all this debt, and this leads to big problems at the very end. And this is just another reminder of how close we're getting to some very, very big financial events taking place. So let me know your thoughts on that. But again, today, a complete confusion. To me, Jerome Powell at times was stuttering. He looked lost and confused. He was, I would say, more hawkish than dovish. But I think the Fed is beginning to get very, very worried. And I think that it's going to be very interesting to see what inflation does this month. But again, the data is so skewed and manipulated, we don't even really know what the real numbers are. And the formulas that they use, for unemployment or inflation or corporate inflation, all these different formulas they use and how they can manipulate it. At the end of the day, all you have to do is go to the gas station today, go to the grocery store today, and you understand that you're getting less for your money. I watching Fox Business Day, they had a woman on, and she was saying that people, this is just how disconnected people are, but very intelligent, educated woman. I don't remember her job description, but she said, people are going into the grocery stores and they're buying stuff, and they're realizing that they have more money left over. That they're getting more for their money, and they're walking out with more money in their pockets. And I was like, where in the world is this woman shopping at? It's not around here in my area, I can tell you that. And reading the comments, I know it's not in your area either. Anybody that can sit there on television and tell us that, oh yeah, you're getting more, you're able to purchase more for your money now at the grocery store. People are beginning to realize that they've got more money left over and that they're making more money at their jobs. And it's just like nobody's believing this anymore. Nobody is believing this anymore. People used to laugh when I said prices are accelerating, they're exploding. Oh, you're exaggerating, you shouldn't say that. Those people all disappeared because they all have been going to the grocery store. They're all paying their health insurance. They're all paying their rent. They're going to the grocery store, the gas stations, and they realize that there's no way you can deny how bad things are right now. You cannot deny the massive inflation that is not going away. Comment down below. Are you seeing prices going down at the pump? Are they going down at the grocery store? Is your health insurance getting cheaper? Has your rent gone down? What has really gone down? I don't really, are your utility bills going down? Because ours have gone up about 150%. And I don't see them going down anytime soon. And I was just talking to Matt the other night. We were just talking about the prices of utility bills and how the average American is beginning to really get scared because if you're used to having maybe a $125 utility bill and now it's $250 or $300, that's a big deal to most Americans, especially people who are retired, don't have a steady income coming in, they're on a fixed income. People begin to get very, very worried because they don't have discretionary money just sitting around to go, oh, my utility bill's up 100 or 200%, no big deal. And it's happening month after month. It's not just 1 month. It's 2 months, 3 months, 4 months, 5 months in a row. And it's really taking a toll on a majority of this country. And people are getting very, very scared because they're having a hard time just paying their utility bills. So people are draining retirement funds, they're draining their savings, they're working 2-3 jobs just to stay ahead of this. And how long can they keep doing this? I'm going to leave it there today. Comment down below. Let me know what you're thinking today. Let me know if you think the economy is improving. Is Jerome Powell correct in saying that the average household is doing good? Is your household doing good, or is it just surviving? I think that a majority of this country now is just getting by. It's just surviving, and they're worried that if some type of emergency arises, they're in big trouble. That if the economy slows down even more than it has, they're in big trouble. If prices go up a little bit more at the grocery store or at the pump, they're in trouble. If their kid falls down, needs 15 stitches at urgent care, they're in trouble. Most of this country now is one flat tire away from big trouble. God bless. Please like, please share, and please subscribe. Be safe out there.